Hi, good morning, everybody. Danny Chard here, and today I am here with David Barr of Pender Funds. So, first of all, Pender Fund Capital Management. Good morning, David. How are you?
Great. How are you doing today, Denny?
Great. Thank you. I will start, as I always do, with a little bit of information about our speaker who is talking to us from Vancouver this morning. So David Barr is the president and CEO of Pender, and is also the portfolio manager of several of Pender's funds, with the full resources of Pender's team of analysts, including the Pender Small Cap Opportunities Fund, the Pender Value Fund, which he co-manages with Felix Nahi, and the Pender Growth Fund, a high conviction investment company aiming to capitalize on long duration idea-centric opportunities in public and private markets. He also works, I should put on a larger font here. He also works with Maria Pacella on the Pender Technology Inflection Fund, an LPGP fund which focuses on early stage technology companies. David began his investing career in 2000, initially working in private equity. He joined Pender in 2003, was appointed Chief Investment Officer in 2007, before becoming President and CEO of Pender in 2016. David holds an MBA from the Schulitz School of Business and earned his Chartered Financial Analyst designation in 2003. He's an advocate of value investing, as well as being a true contrarian. So good morning, David. And how are things looking in Vancouver? How are you guys dealing with COVID? How does it look there? Vaccination, everything?
Well, I mean, we've done pretty well throughout the entire pandemic. We're pretty fortunate to have great public health officials that really helped stick handle the situation out here. But much like the rest of Canada, we're lagging the rest of the world in terms of vaccine deployment. So we're patiently waiting our turn. But it's, obviously we're lagging the rest of the world, which thank goodness summer is coming.
Yeah. And people are working from their offices. There's no lockdown or anything?
There's no official lockdown. We shut our offices over a year ago now. We went with the policy where we're first out, last back. I think we didn't want to be putting anyone in the company in a position where they felt like they had to come in the office, because a lot of times people are having to use public transit, or even just going up the elevator to the 18th floor. There's a lot of interaction with people that they can't avoid, and if they're feeling pressured to go in the office, we didn't want to exert that type of pressure on people, so we're still locked out.
Got it. Great. So let's start our discussion of today, and maybe we'll start with a little bit of you telling us. I read your bio. If there's anything else you'd like to add, and how you ended up at Pender, and of course a little bit of information about Pender Capital Management. What does the firm specialize in, and your story?
Yeah, so what we do at Pender today really derives from how I started my career, and I started in private equity, and that really drives a very deep, disciplined investment approach. And what it really puts forward first is analyzing businesses and the industries they're operating in. So it's when you're in the public markets, you can get really enamored with stock quotes and spreadsheets. Really, for us, it's understanding the quality of a business and the securities that business issues, and then applying a value approach, and making sure that we're getting more than we're paying for whenever we buy something. I don't like saying we're value investors so much anymore, because people right away think that you're investing in old economy, broken down asset. High asset-based companies where you're looking at the balance sheet. We think value investing is so much more than that, but there are some negative connotations with it. So for us, it's really focusing on the quality of the business and what a business is potentially worth.
And by the way, how do you see, speaking about COVID, the aviation space? Speaking about value investing, I believe Buffett was going short on aviation, and I think the hotel industry as well. How do you see it now, a year into COVID? Just before we dive into our other questions, how do you see these sectors?
Yeah, I mean, it's fascinating because we saw, the turmoil that happened last March. And if you're last March, when you're sitting there and you're saying, when's travel going to return, your dispersion of outcomes was enormous. We had no insight into a potential vaccine. We had, there was still very limited data on the actual impact of the virus and what it could potentially do. So to be able to forecast last March when travel would return was certainly on my too hard pile. Fast forward to today, I think what we saw in November when the strong vaccine data started coming out was you can now tighten your ranges on when we expect air travel and travel in general to resume. And I think if you're ever on a Zoom call with a bunch of people and you say, who's looking forward to traveling as soon as you can, everybody throws up both hands as fast as they can. So I think, not only are we, will we, when the vaccine rolls out and restrictions decline so people are able to, people are going to be doing it as quickly and as often as they can. And I think if you haven't booked your winter vacation flight right now for next year, you better get on it, because if I'm an airline right now, I'm going to take advantage of repairing my balance sheet because people will pay pretty much anything to go traveling when this is all over. So it's I think it's going from probably worst case scenario to understanding there's going to be an opportunity here to capture a lot of margin. Going through the whole sector, there's good companies and bad companies, and you have to be very company specific to make sure that if there is a variant that comes out, that you are going to survive to fight another day.
And do you think we'll see Chapter 11s? I mean, do you think that some of them made it so far just because, for instance, the US government just threw money at them that's superficial, and at some point they're going to run out of it and not make it till, when I was speaking to Philippe de Gaspé-Bombian here, that the family, he said that he thinks, which I definitely agree. He said, listen, last year is horrible and it's going to be hell for many. This year is going to be a little bit of more stable year, but still not too many will survive. And those are going to make it till next year, they're going to cash out like crazy on everything. But do you think we'll see some Chapter 11s that some of them won't make it till that point? Or you think we somehow, with the government support, brought all the airlines out of it?
Yeah, I mean, I think what we've seen is the government committed to supporting the airlines until they have a reasonable profit expectation again. So I wouldn't expect a lot of Chapter 11s until we're back to a more normal state, whatever that normal looks like. And then at that point, when companies are able to operate on their own, I think that's when government will withdraw their support. And then that's when we'll see the strong survive and the weak go by the wayside.
Just another question before we go to ours. Do you think, I haven't really looked at the airline industry recently. Do you think that the markets have already priced the good future that you're seeing for the airlines, or you still think it's an amazing buy opportunity for anybody that, will go with the major airlines and invest with them now?
Yeah, I think we take a very probabilistic approach, and I can run through a scenario where, the vaccine works really well and people are traveling as quickly as they can and back to normal, and the whole travel industry goes gangbusters. And in a scenario like that, we'll probably see that in retrospect, 3 years from now, that this was a great buying opportunity. I think the issue when we look at these companies, though, we also have to consider the probability that there are variants out there, and they may decrease the efficacy of the vaccines, and we could have, a really extended period of time where global travel is highly discouraged. So it's, assessing those probabilities is the tricky part in determining whether or not it's a screaming buy opportunity, or conversely, if this is extended, it could be Chapter 11s right across the board. So, what makes it interesting is there is these wider range of potential outcomes. So if you have some insights, it's a great opportunity to make money investing.
Got it. So it's a risky investment so far. I mean, you might make a great ROI and you might lose everything with some of them.
Yeah, it's a little bit outside my comfort zone right now.
Yeah. So you're both the firm's CEO and also a portfolio manager. So I spoke a little bit about your very short, we took a very short version of your bio. If you can tell me more about your background and what would you say is your area of expertise?
Yeah, so I started in private equity, specifically focusing on growth stage technology companies. And so I spent the first decade of my career just immersed in understanding these private tech businesses, how they were growing, who were the high quality businesses, what were the low quality businesses, getting to know management teams and the industries. And so we've got a deep understanding of technology right across the board at Pender, and that translates into both our funds focused on private markets and our funds focused on public markets. As you mentioned, I'm president and a portfolio manager. I think one of the in the investment world today, there's a lot of large firms, and passive investing is clearly a trend with a lot of tailwinds. And if you just want market type returns, you can get those pretty handily through ETFs and low cost investing. Where enterprising individuals and portfolio managers and teams can actually add value is in more niche parts of the market. So there's various areas. We're active in small cap and high yield, and in the private space, there's lots of opportunities for very skilled investment teams to generate alpha for portfolios. I think this is important, being the leader at Pender, where I'm an investor. I wake up every day trying to find something that's highly compelling to add to our portfolios. And the whole MO for Pender is we are investors and we're trying to generate alpha. And having an investor setting the strategy and the leadership of the organization provides an organizational edge. We believe that the entire team can focus on investing the right way and trying to add alpha to client portfolios.
And by the way, another question I have, would it be right to generalize and say that the tech sector in general was actually profiting a lot from COVID? I mean, if you look in general at the world, the old economy suffers very much, right? We talked about aviation, the hotel industry, restaurants, small businesses. And on the other hand, the technology companies or the technology-based companies, Amazon, eBay, Zoom, all these guys, I just had a conversation with a fund that does something interesting. They're buying old school restaurants and logistics companies, and then they invest in top AI companies and technology, and then they merge the two, because many that need to understand that today you must have technology in your company. Not to mention, by the way, cyber technology, which is a different world, and healthcare, which is a different world. I don't need to even talk about why that became very strong and prominent. But even the other technologies, people need to implement it to play the game right in a virtual world today. And many won't have the money. It's like a catch-22. They don't have the money because they're suffering anyway. So by the way, that fund I spoke to does exactly that. They marry the two because they know you cannot invest in it, but they know you have to. Is it right to say in general that the tech world has gained from this? Or you'd say that, well, it depends, because many companies, the smaller ones that needed to raise capital, were stuck in between and couldn't, or not? I don't know. How would you look at that?
Yeah, well, I think you said it does depend. And I think when we were reflecting on last March, with our investment process, we had portfolios going into the pandemic, and things took a dramatic turn for the worse in the middle of March with there's some shenanigans going on at OPEC, as well as the global shutdown because of the pandemic. And at that point in time, we had to reevaluate every single position in our portfolios and basically re-underwrite every single investment. And to your point on the more traditional industries, logistics, airlines, we looked at those, and the intrinsic value of those companies had probably decreased quite a bit. And as well as in a lot of these companies, the risk had gone up. So we exited or decreased weighting in a lot of those positions really quickly. And one thing which we found fascinating is traditionally in a massive market correction event like that, you see intrinsic value of every company across the board decline. And Felix and I were chatting end of March last year, and he basically said, he's like, this is not that time. And we started to see, with the rapid change of consumer and business behavior, a lot of technology companies had their cash flows pulled forward 2 or 3 years. And there's a great quote by the CEO of Microsoft saying, "We just experienced 2 to 3 years of adoption of people utilizing cloud-based technology." And so a lot of these cash flows were pulled forward, which then actually increased the intrinsic value of a lot of these technology businesses. And so there we were at the end of March last year, where markets were off 30 to 50%, and the underlying value of a lot of these companies had actually increased. So we took that opportunity to redeploy into a lot of back into the technology sector, where we historically had a very high weighting. Going into March, we were probably near our lows and our highs, but we took it back up well to our high technology weighting and continue to be there today. And you raised a really interesting point with the other guest who was talking about bringing AI into the traditional world. I mean, every company needs technology is a key part of their business operations, and it's basically technology helps streamline various business processes and increase your functionality, increase your ability to execute. And I mean, I think one great company in our value fund portfolio and our US portfolio was Square. And people may know Square. It's the Square dongle on the end of an iPhone if you're going to a farmer's market that allows that farmer's market vendor to accept Visa and MasterCard, which was a wonderful invention and really helped out these really small merchants. But what Square was able to do really quickly in the middle of the global shutdown was create an online presence for their offline small to medium business customers. So, I mean, one area, a lot of these nano breweries that had popped up over the past decade, they all have great in-person followings, and people would go fill up their growlers and buy their beer at these nano breweries. Square was able to pivot really quickly so that people could order online and have beer delivered to their house, which they were able to take to all their small to medium business customers and really allow them to transition from physical to virtual really quickly. So there's these enabling technology companies which have been able to help out the real world businesses. And then the other side is you look at companies where they had a really poor response to going virtual. And in Canada, we had Indigo here, in one of our major retailers, bookstore, an experience-driven gift shop, and have wonderful in-person buying, great experience. They really struggled moving to the virtual space. So that really, you can look at the management teams and those that were really forward thinking and building out their digital infrastructure, and were able to actually capitalize their transition through this challenging period of time. So for us, that really knowing those companies that excelled and pivoted quickly with the turmoil that happened, those are the companies that are able to adopt technology and evolve and really capture market share and accelerate their growth moving forward. Those that had more struggles, it tells you a lot more about the culture and the forward-thinking nature of the management teams.
Now, I noticed your fund returned over 46% last year, which is amazing, as well as having a very strong start to this year, which is, again, quite impressive. How did you get there? How did you accomplish that?
Yeah, it was really, the great part about the small cap space is you get to do the less obvious things. And, kind of we transitioned it into technology companies in late March and throughout the summer. And we saw kind of the Google and Facebooks and Netflix and all those companies rebound really quickly coming out of the pandemic. In the small cap space, there's a great opportunity and remains one where there's a lot of undiscovered smaller companies that have had similar dynamics where demand has been pulled forward dramatically. More people are using their products now. So we were able to hit that second layer of technology company and continue to find opportunities in that space with this change in behavior. And one of the outcomes of COVID is, here we are doing a virtual conference. I would rather be doing it in person because I thrive off seeing people in person. But the nature of so many businesses and people's comfort level doing things like this has changed dramatically. And I think it's there's that study where it's 62 days of doing something differently creates new behavior. So a lot of new behaviors have been created out of this. So we really focused on that second layer of technology company. My partner Felix wrote a great piece on, we called it the ZIPs. So Zillow, IAC, Par Technology, Square, these great technology businesses which were enabling other industries or disrupting industries where demand had been pulled forward. So it was really by focusing on that space that drove our returns.
Now, I believe you're fairly invested in technology. Has that always been the case?
Yeah, that just comes from my background, being in private equity and venture, being very comfortable with the technology space and understanding those business models and the potential competitive advantages they bring to the market. It was great being up here in Canada where we had Constellation Software and Mark Leonard just doing a wonderful job building a great software company. And there were a lot of lessons you could learn from Mark along the years about the duration of enterprise software contracts, particularly vertical software. A lot of people would historically have the opinion that technology disrupts stuff, but it's just going to get disrupted. So you have no idea how long the product cycles are going to last. And that's certainly true more so in the consumer tech space, but in the business world where tech continually becomes more deeply integrated into day-to-day functionality and mission critical functionality. A lot of companies, it becomes a lot easier to be able to forecast out cash flows of these companies, and then you can, when you back it up, one of the key reasons we're so active in the space is when you look at how the types of companies that drive market returns over the long term, you're looking for companies that are addressing really big target markets. So you need a big market opportunity. On top of that, you also need a company with a competitive advantage. And the holy grail is when you can find a business that has really high return on incremental cash flow. So when you can reinvest in your business at really high rates of return and you got a long runway, that can lead to investment nirvana and outsized returns. So in the technology space where you have really high gross margins and operating margins, these are very capital light business models where you don't have to invest a lot back into the business. So it really gives you the opportunity to have these runaway business models, which will drive stock market returns over the long term.
Now, what types of companies do you invest in? Are there certain attributes which set certain companies apart? Are you looking at private, publicly traded? What kind of market cap?
Yeah, and we're business analysts first and foremost, so we're scouring both the private and the public markets. And ideally we're looking for businesses that are addressing these big end markets, where you've got high return on invested capital and a demonstrated management team or history of executing successfully on the strategy. So when we can identify that and find it at an attractive price, we'll look to add it to our portfolios. Then it kind of breaks down. If it's on the private side, it'll be going into one of our private portfolios. If it's on the public side, it will go into one of our public portfolios. I think you mentioned capital, market cap size there. We do focus more on small cap. I think trying to find those businesses that are going to grow for the next 10 to 20 years, where there's still that opportunity to participate for a long period of time. It's more likely to find those in the small cap space than in the mega cap space. So we do skew to the more small mid cap space.
By the way, we didn't talk about it before, but what's the minimum investment with you guys? What's the holding period? How does it look like? You invest in a fund, you invest sometimes in a specific deal. How does that look like?
Yeah, so in our funds, our minimum investment size is $1 million if you to come with us directly, but we're widely available in Canada through financial advisors. Some of our funds, our private funds, not so much, because in the private space, you need investors who are willing to commit their capital for a longer period of time. And it's a better mismatch, it's a better match with our private vehicles with longer term focused family office and institutional clients.
What's the size of the funds? The range?
We're 2 billion of AUM today.
Wow. Now, are you mainly investing in Canadian companies or also the US and beyond? It ties in with the size and stage of the investment we're looking at. So Maria on the private side is doing predominantly Canadian and mostly Western Canada technology businesses. Myself on our small cap mandate, it's a Canadian small cap fund, so it's about 80% Canadian small caps, but about 20% US. And then as we go into our larger mandates that are more all cap in nature, it tends to be about 50-50 Canada, US / global. So as we go up in cap size, we cast our net further abroad. And really the driver for that is when you get into more mature businesses, it's easier to assess management teams based on their track record. So the company's been public for 20 years. You can read 20 years of transcripts of what the CEO said they were going to do and how they did against that. So you can get to a higher comfort level with the management team, and there's usually better information available. When you get into the small cap space, companies have been public for not as long, so you need to do more digging around and meeting with management to understand if you think it's a team that can actually execute. Now, it has been a monumental shift in the world over the past year. Obviously, we spoke about that. As you look ahead, where do you see the opportunities? Are there themes you guys focus on? How do you see that?
Yeah, we've segmented into the digital world and the physical world, and I agree. We have seen this change in behaviors that has increased the adoption of a lot of technology, online buying, and we've been investors in a Chinese company, JD.com, and Baidu, and several others for quite a while. And JD is a wonderful case study for people in North America today, because JD in 2003 was a physical retailer in China. And Richard Liu, the CEO, when SARS hit in China in 2003, they had to shut all their stores. And so in 2003, Richard Liu said, how am I going to sell stuff to my customers? And so he really quickly transitioned to online, and then now has built one of the leading online commerce as well as logistics companies around the world. And so we've watched that and studied that, and I think it's giving us a better understanding of how North America is going to evolve coming out of this year-long lockdown, and however much longer it may go on for. So having that blueprint allows us to kind of have a better picture of what's going to happen in the digital world over the next 36 to 60 months. The flip side is on the physical side. And I think one of the things that was laid to bear in the global pandemic is North American supply chains were hit pretty hard. And that speaks to globalization, but also the lack of investment in physical infrastructure in North America for the last 20 to 30 years. We really are behind Asia in terms of our physical infrastructure here in North America. And so I think when you tie in the fact that we've seen this disruption on supply chains, we've got aging physical infrastructure, and like when you look at the people that were hit hardest during the global pandemic, it's a lot of trades, physical laborers, and with governments, their first response was clearly a monetary response to what was going on in the pandemic. I think we can expect to see a fiscal response where governments invest in rebuilding infrastructure to help people who were marginalized throughout the global pandemic get back to work and rebuild their lives. So we just expect a lot of government money going into fiscal stimulus.
Can you highlight a few examples of companies which exemplify these things?
Yeah, I mean, one of the companies we bought along these trends was a company, Fluor, in the U.S., construction engineering firm. Builds is always in the bidding for a lot of these large contracts. Nice that it has some added optionality with small cell nuclear. As we transition towards a carbon-free world, there's so much capital chasing carbon-free investments in the energy sector, and small cell nuclear is, it has to happen in order to support the drive towards renewables, because you need the baseload functionality. So Fluor has probably one of the leading small cell nuclear companies as a subsidiary, and they've announced that they've had the first approved pilot project in Utah earlier this year. So just there's an opportunity to capture the rebuild of North American physical infrastructure, as well as participating in the drive towards renewables. So that'd be an example of in our portfolios today.
And maybe, and I see we have another question here, but maybe one last one from me is what sets you apart as a firm to invest with? What do you think puts you, in a different place than other alternatives?
Yeah, when being a firm focused on investing, there's a lot of companies out there which are marketing organizations trying to grow their assets under management so they can grow their fees. First and foremost is our organizational edge, where we're trying to create a framework for our fund managers to manage capital over the long term, because having a 3 to 5 year time horizon in this world today really does set the majority of firms apart. If you look at the data, only 1% of actual investors out there hold stocks on average over 1 year and have a very high active share. So just by being focused for more than a year and having a high active share, you're in the 1 percentile of investment firms out there today. Yeah. And then on the investment side, just having that business approach, bringing this private equity approach to the public markets as well as in our private markets, and having people can kind of look at our track record and see our disciplined approach to how we've executed on that strategy over the last decade.
Very interesting, and you guys spoke at our Toronto conference. We were supposed to do this year our Vancouver conference, obviously last year. So our audience, our families know and were impressed, I believe, with what you guys do. I have one question here. Someone is asking, what is your view on ESG stocks?
So, I mean, ESG has become very topical over the last couple of years, and it's always been a deeply integrated part of our process. When you think of on the environmental side, yeah, like people would always, their eyebrows would always raise when, I'm a Canadian small cap manager and we're not doing much on the resource side, but we'd always be doing lots on the renewable side. So, and then I think it's assessing your businesses from an environmental impact and risk perspective. I mean, there's a lot of potential risk out there in the world today in terms of the environmental debt that companies have incurred. So you really have to have this at the fore of your investment process today. On the governance side, it's we've always been coming from the private equity world where you go on boards and you work with companies to help them execute on their plans, and you're always talking to the other directors and people at the company. I mean, we've always been very engaged shareholders. We vote proxies how we think is in the best interest of the company, not necessarily management all the time. Although we try to identify management teams that are aligned with us and our interests so that we can support them and help them build their businesses over the long term. And then, on the social side, I think this speaks to our emphasis focusing more on technology companies, and more so today, companies are collections of people. It's not a plant, it's not equipment, it's people. And treating people well, doing the right thing, encouraging diversity and inclusivity within companies creates way better cultures, and those types of cultures are going to outperform. So, I mean, I look at ESG from an investment perspective because we've been executing on it for so long, where if you put those factors at the fore of your investment process, you're probably going to drive better outcomes than a lot of other investors out there. The flip side of it now is it's becoming really trendy and cool to be invested in ESG. So there's more capital coming into the space. And those capital flows are influencing capital markets. And you can kind of see it with, how capital is leaving the energy space, the oil and gas space, and chasing renewables, because the mandates for a lot of these funds moving forward is people don't want oil and gas exposure, but the world does need energy. So where are we going to get it? And it's what's interesting is we saw an analyst day last year where it talks about the cost curve of a lot of renewables compared to traditional fossil fuels in terms of powering the electrical grid. And the impact of so much capital going into ESG funds and funding a lot of these renewable projects has now created a landscape where renewables are cheaper on a dollar basis in a lot of situations than traditional carbon-based energy sources. So it's the capital flows are actually creating that dynamic, which will cause more ESG high-scoring companies to do well over the longer term.
And maybe one final question is, how long ago did Pender Fund was actually started, and was it always what it is today? It was always focused on technology. We spoke about a little bit before. So how many years has Pender Fund been around, and how did it start really? I mean, yeah.
Yeah, well, so Pender started in 2003. I was working with a venture firm in Vancouver, and I started during the .com glory days, and I started right at the end. So it was you ring the bell on the NASDAQ at 5,200, and then it's a sharp decline down. And, for me, that was a learning experience where, there was so much promise with all these exciting .com companies, but they didn't have any business models. Like there was negative gross margins, there was, profitability was scoffed at. And so within our portfolios, it was really focused on those businesses that had a compelling product for customers, and that product was they were able to make money or get to profitability in short form. So that really, focused me in on growing profitable technology businesses or having that self-sustaining cash flow ability. The fund I was with fell on hard times as the tech sector melted down, and two of our founding shareholders purchased the management contract, and I joined them. And we were, very active in the venture space from 03 to about 07. And at that point in time, I was looking to start a small cap hedge fund because I'd seen a price disconnect between public technology companies in Canada and private technology companies. And so going down the path of starting a small cap hedge fund in 08, I think we all remember that well because that was a financial crisis, but really led to me coming on as a full partner and launching our more traditional asset management business in June of 2009. So Pender, as we know it today, has been as it was since about June of 2009, and it's been a very rewarding, exciting journey.
And do you guys invest in blockchain?
We do. There's some very interesting dynamics going on with the blockchain and cryptocurrencies. I guess it's interesting from a small cap perspective because we were watching the space back in 2016, 2017 when there was a flurry of companies coming public, and it was kind of like the .com days where it was like, there was a lot of great buzzwords, not a lot of great businesses. But over the last few years, as you follow these companies, you get to understand who the more credible management teams are, where there's real business models, and so it's given us an opportunity to kind of look at some of these companies and participate.
It's interesting because I remember the .com days. I remember going to this big conference and I saw ridiculous .com companies, but anything that had .com in it got money, got funded. But I saw like stupid things. I remember until today, a company that had you had like a 3D picture of yourself in order to speak to somebody, and then the internet was not as evolved, so it was like very heavy on the net itself, and you got stuck in the middle of the conversation. And I was like, but why do I need a 3D doll talking instead of myself with someone? And they explained something. I didn't understand it, but they had a lot of giveaways. So I know they got funded very well. But you know what?
I didn't understand that.
Talking about technology, Alexa is talking to me. I didn't even talk to her. I'm wondering, I wasn't an analyst back then, and I'm not now. But back then, it felt to me that the .com was, it wasn't like the masses were investing, I think, in .com, like the everyday person. Well, blockchain reached those masses in 2018, 17, all that area. And you saw ridiculous ICOs. You saw companies that are basically stealing money from people because there was so, I don't know. And the masses went after them. I don't think the sophisticated investors did, like yourselves, like family offices. And now it seems, and again, it's all my looking from the outside in, better, like it is, like all that died down, all those stupid companies either ran away with the money or disappeared. And the masses took their hit and disappeared as well. And now it's supported by more institutional capital, more sophisticated capital, and more like, the real serious players are the ones that are here. Is that a right way to put it? Or would you say the market matured and you're seeing, because, one thing I did say, we do like every month a blockchain family office conference because we pride ourselves on being the most tech-oriented family office group out there, coming out of Israel originally, which is understandable. And I always, told, other companies we spoke to, Microsoft, Libra, HP, all these guys, we've always seen blockchain as promises, but we've never seen anything really happen, right? I mean, other than cryptocurrency as a tool that works, everything else that you guys promised me, smart contracts, micropayments that ended up being too slow, and taking real estate and taking parts of it and selling parts, all of that stuff, we didn't really see. And then when I spoke to Microsoft, they say, well, we are actually this week talking about our supply chain management solution based on blockchain. So you see all these serious folks putting loads of money into this. So you're saying, you know what, probably, it is something worth looking at. So that was a very long question for a very short question, actually, which is how you see that.
Yeah, I agree 100% with what you're saying. There's a lot more institutional support for it now than there was 3-4 years ago. There is absolutely still buyer beware. There are a lot of like really bad companies out there with people looking to, take money from other people's wallets and put it into their own wallets. So you do have to be very careful. But we've certainly seen the institutional support of the of blockchain and cryptocurrency in particular. And we saw JP Morgan, which they were going to fire analysts if they even talked about Bitcoin. Now JP Morgan's totally behind it. And I think when you get that, it becomes a bit of a self-fulfilling prophecy where when all the banks get behind it and governments get behind it, then it will become a part of the mainstream. And I mean, there's some we kind of dabble around the edges with it. I mean, Square is in the space, and they've built out their Cash App. And what's really cool is when you look at the United States, I think it's 12% of the population is unbanked. And imagine being unbanked in the world today, not having a credit card when everything you buy is online, or if you go to a merchant, you have to tap because people won't accept cash. Like it's a previously marginalized part of the population that is even worse off as a result of this move to digitization. With Square's Cash App and cryptocurrency, they can bring that unbanked into the banking world and into kind of the modern basis of society today in terms of payments and transactions. So it's a wonderful opportunity to do a lot of good right across North America and around the world.
And this is a great opportunity for me to tell you guys that I'll be speaking to one of the most famous Canadians in blockchain, Anthony Diorio, the co-founder of Ethereum, will be with us this Thursday. So that's going to be interesting. And maybe last question on that. I had the chief analyst of Bloomberg at our conference, and I told him, people criticize cryptocurrencies because it, consumes a lot of energy and pollutes and all of that. And he said, well, riding on horses doesn't pollute and get you to places. We're not going back to riding on horses, do we? That's the progress. And maybe my last question here is, you see very extreme opinions about cryptocurrencies. I mean, you see, like you say, JP, Citi, whomever, give Bitcoin, I think $150,000 target this year. And then on the other hand, you see Nissim Taleb and Nouriel Roubini saying it's worth zero. Do you think they just don't get it? They just don't get the future, and they just don't understand that it's a means that once people trust the means of payment, because I think Anthony Diorio, somebody told me, listen, at the end of the day, it's a trust war. It's trust. When people trust that this thing would help me exchange products with you and goods, then we're good, right? So it used to be gold. Who knows what gold is? How many gold reserves are there? It's just something that, people trust. But if everybody will go to the bank today, we will have bankruptcies all over the place. So as long as people trust it, it might be doing that. But when you look at cryptocurrencies, do you think that the Talibs and the Rubinis just don't understand what's going on? They are old school great economists, but they don't get the future?
Well, I think the future is uncertain. So there's absolutely a future that may play out, and they are 100% correct. I think there's probably cryptocurrency is going to become a part of the mainstream, and it has to do with what you were saying, and it's all about trust. And when you start to see large organizations get behind it, it shows trust is increasing in it as a a method of payment transfer, a method to transact in. So who's going to be right at the end of the day? I'm not sure, but I certainly think that there's a lot of room for cryptocurrency to move into the mainstream over the years to come.
I see another question. What's the minimum investment? We talked about that, which was $1 million. But we will send all the contact information of Pender to all of you guys, so you can reach out directly and ask questions. Anything else you'd like to add, David, at this point?
No, thanks for having me. I can't wait for summer in the Rockies, this beautiful lake behind me. I am in Vancouver, and it's not quite looking like that today.
And I was just saying that, unfortunately, we don't, we see the pace of the vaccination. Canada looks like it's going to take a while, so we're not certain we'll be able to pull off an in-person conference this year. We are thinking about it. We'll definitely look close, and hopefully in Q4 we can do something. If not, it's going to be Q1. But that's why we're doing an online, like we did last year with Sylvan Adams and the Gaspin, de Marais, and Saputo and Fasken and Scotia. We did our Canadian Family Office Conference. So right now we are happy to announce that we will be doing another Canadian Family Office Conference probably around June. We will keep everybody updated. Next month we're having an in-person conference at the rooftop of the World Trade Center with Larry Silverstein, one of the world's most famous real estate developers. And in June we're in the UAE. So I would like to thank David. I'd like you all to stay safe, and we're looking forward to seeing you, David and Pender, in person, as we have seen each and every year at our conferences in Toronto. And our Vancouver conference that was planned for this year, obviously last year, didn't happen, but we will be there. So thank you, David. Stay safe, everybody, and we're looking forward to seeing you soon.
Thank you, everyone.
The recorded session will be sent to you all as well, so you can watch this again, as well as the contact information to David's team. Thank you so much. Bye from Rye, New York.